Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on the commodities here as we head into the end of April, the start of May. We're going to look at the dollar, gold, oil, and natural gas. Important to remember that the general correlation between the dollar and commodities is inverse. Of course, general and always changing is important to remember. But what we're looking at is the weekly time frame first, and then we'll zoom in. So the weekly chart for the dollar made a bull break this last week, and before that we were very cautious of the potential of a bear flag as the bulls were clearly struggling to see any kind of follow through on this bounce, and it was an oversold bounce on the weekly that just didn't get any momentum. Finally, the bulls got some momentum, and it's decreasing the odds that it is a bear flag, but still at this point we had this 6-week dump, and it took us 3 months, twice as long, to get back halfway of what we dumped in 6 weeks. So the bears definitely still have control, and I'm looking at the longer term trend lines here, or the longer term resistances of the lower highs that we're watching, and there's a couple of them to be watching here. So as long as these levels are resistance, the overall downtrend on the weekly time frame long term is still intact, and we could draw a downtrend resistance line, and I'm not one to be using trend lines over price action personally, but you could draw a couple different ones, and that's why again I don't really like to use trend lines too much because they are definitely very subjective. So we would have one trend line here. Let's make it white so we can see it. And another analyst might draw their trend line in a different spot starting at a different anchor point and then draw it tighter. That would have a bull break here. So it all depends on where the starting point is and when you're drawing these trend lines, but I'm going to stick to the price levels, which are most important for me. And we're looking up in the $94 and $95 range, still a few percent away from where we stand right now. So looking at the daily time frame, the dollar, big bull move, certainly some profit taking at the end of the week. We hit the RSI at 70. It's a bearish reversal spinning top, or actually a bearish reversal shooting star candlestick with a big upper wick. And the last higher low on the daily, we haven't really established a clear higher low of support, but the last support we're looking at is 90.71. So we're likely to see some healthy consolidation. We're going to be looking for the bulls to form a daily higher low because of the magnitude of the breakout. We could very easily form a higher low anywhere in the low $90 range. And we'll see if the bulls are able to see continuation with higher lows and higher highs continuing on the daily time frame after some of these RSI levels have cooled off a little bit. So gold on the daily time frame, or the weekly actually to start, so it's very tight. And we had a double top that the bulls were unable to get over, and it's really almost more like a triple top at this point. And we have our base of support. So this is the most important channel to be watching. And you can see we've been within this channel now for over 4 months. So key support is 1302. We might as well call that 1300 psychological. And key resistance is 1365, which we have rejected from a couple times, 1365, 1366. So that's what we're looking at right now. And we're closer to a bear break than a bull break, not by much. We have a $65 range to be watching, and we're only $23 above support. So it's all about which direction breaks first on this weekly time frame. The daily chart had been pulling back, bullish day, and that's again due to the dollar pullback. So the dollar broke out, gold pulled back, and that's the relationship we're in right now. And the fact that we broke the support level of 1319 was bearish. That did shift momentum because the daily chart did have higher lows and higher highs until then. So we did have a bear break this past week. So it's all about the dollar. It's all about the FOMC Wednesday. It's a big correlation to, or a big event, I should say, for the dollar and for gold and all commodities in relation. So pretty much Wednesday is going to let us know, are we going to break this support, or are the bulls going to be able to stay within this channel a little bit longer? Oil on the weekly time frame, definitely favoring the bulls. We have inside bars to be watching, inside bar over the past couple of weeks. And we are looking good as long as the bulls can hold a higher low of 61.84 on the weekly time frame. That's our most recent higher low. So even if we do get a bear break, it's a comfortable position for the bulls because we could pull back to 64 and still be forming higher lows. The daily time frame, again, healthy consolidation at this point. The short-term range to be watching would be right here because we have clear lower highs on the daily, but also a base of support. We bounce off of 67.17 and 67.14. That's essentially a double bottom, and a lower high of resistance is 68.75. Break 68.75, and we're looking for continuation. Break 67.14, and we're going to be looking back to the weekly for some healthy consolidation into the $65, $64 range. So that is where we stand on oil, still very much favoring the bulls. And you look at the weekly chart and zoom out, and there's a lot of space with a lack of resistance if we do see continuation here on oil. Natural gas, I'm using NGM 2018 futures contract. Still watching a tightening equilibrium pattern. Haven't gotten a clear break that I want in terms of comfortability that I'm looking for. So we've got the high, the low, lower high, higher low, lower high, higher low, and potentially now another lower high. So we have broken some ranges, but not really seen a whole lot of follow through. So sometime in the next month, I'm looking for some more clarity where we saw a bear break, but a long lower wick of bulls buying the dip. And now we saw a bull break, but an upper wick of profit taking. So still choppy back and forth action. The daily time frame we can see favors the bulls a bit, as we do have daily higher lows as the bulls are trying to form higher lows and higher highs, which they have been successful doing over the past couple weeks. And you can see the contract volume coming in here once this contract becomes more relevant in terms of timing. So it's all about that pattern on the weekly time frame. This is the kind of trade for natural gas where I don't trade natural gas a whole lot. If it is a very clear setup, I will. And this is the kind of pattern that I'm just going to keep watching for the next month. And if it's a very comfortable setup that I like, I will act on it. Otherwise, I will let it pass me by and move on to the next trade. So keeping an eye on the dollar and gold relationship. Oil still strong. Natural gas weekly equilibrium. That's where we stand heading into this coming week. Hope you have a good rest of your Sunday.